Good evening, TheoTRADE. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 28th of November, still here in 2023, with one more month to go in this year. So what we'll be talking about in tonight's video is going to be some sector performance, things that happened in 2023, and we have a month to go, so we'll pinpoint maybe where the market could be headed before the end of the year. And we'll look at a few things on the intermarket, which includes crude oil, gold, and the bond market. Let's actually start with this, which is your S&P. So in the grand scheme of things, as we go into December, the S&P, at least the futures, are up about 15% in 2023. Looking at the SPX, maybe a little bit better guide, it's going to be up about 18%. It is the Nasdaq, and the Nasdaq will actually look at the QQQ, because that'll be a little bit better of a track, is up around 48%. Keeping that in mind, let's look at the Russell, which is the IWM. That's going to be your small cap index, is unchanged. This is a much better perspective of the stock market, or I should say the economy, than the tech sector. And of course, what we look at here in TheoTRADE, which is our monsters of tech. Meta, Apple, Microsoft, Google, Amazon, a little bit of Tesla, and a little bit of NVIDIA. Those are going to be the stocks that drive the Nasdaq, the Qs, and to a large part the XLK. But outside of that, that's not been the performance of the market. And we can see that here with, we can look at the Dow as well, but I like looking at the Russell, the small cap, or of course the unweighted S&P. But let's take a look at our sectors. Now this is going to take our performance mainly through this year. 1 month more to go, but this is our sector performance. And let's just do a quick scan of what this is, what it means, and how we can take away information from it and use that in our trades. The XLF, the financial sector, mostly is unchanged. It is in a sideways trend. There is no up, there is no down. XLK is going to be our top performer, up about 40%. XLY is discretionary, and discretionary is a lot more than just retail names, but it's mainly dominated by Amazon and Tesla, at least in terms of the holdings. Here is going to be Apple and Google and Microsoft and some of the other technology names, so mainly Apple and Microsoft, which have had Microsoft, which has had very, very good year this 2023. XLI is going to be your industrials, up about 6%. B is going to be materials, flat as a pancake, just like the financial sector. B is materials. E is going to be energy, and for the most part, energy is down, again taking a little bit into 2022, down about 5%. P is going to be staples. That's things like Coca-Cola and the things that tend to be used, bought, or consumed even in difficult or declining economic times. And that's down about 7%. V is going to be healthcare down about 5%. And the weakest performer in 2023 is the utility sector. And that is with rising interest rates, for the most part, utility stocks have taken a downtrend. Many of them have been shortable in 2023. But as interest rates pull back a little bit, the utility sector itself is pulling back, and let's start with that. The financial sector has had a large rally up from the lows. The technology sector, in terms of the last few weeks, and the holiday tape and holiday trading, has done really, really well, outperformed all others. There's the rally in the discretionary, and it's across the board. It is a wide across-the-board rally. Support level retracement or support level bounce in the materials. But this in energy, notice we had all the other ones come up. Energy has gone down. And that's good, as the price of crude oil, or the price that we pay at the pump when we go fill up our cars or trucks or SUVs, that's actually a good thing. And it's a sign inflation is coming down. P, which is staples, has had a decent rally off the lows, and of course, the healthcare sector has as well. It has been resilient and strong in the XLU. So once again, this is not a bull market, this is not a bear market. It is a market that is dominated, and dominated is a very, very good word, in terms of what these 6 stocks are doing to the broader market, dominated by technology names, and to be a little more specific, names within the domain of artificial intelligence. ChatGPT, Microsoft, Bard, which is Google, Llama, Facebook, NVIDIA is a chip maker, and other stocks and companies, large and small, which have had a shift toward artificial intelligence. That's going to be one of the buzzwords as we finish up 2023, as we look at the year review and going forward into 2024. It is what has made the Nasdaq outperform everything else. That means the Qs, again, technology sector, but everything else outside of artificial intelligence or that particular technology has been flat or stagnant like the broader economy. Within that, we're seeing in today's scan, as we finish up November, these stocks are making new 52-week highs. And there is our good friend or enemy, friend to me, Microsoft. But also we see Cintas, we'll see Williams Companies, and Garmin back again, CBOE, Akamai, and a few others. Just a quick look at some of these stocks. We'll detach this so I can go and click through and show these relative strength leaders in 2023. Microsoft is up at another 52-week high, and that's been the case since 2023. Progressive Insurance has popped up on the list ever since breaking out and has continued to make those new highs. Palo Alto, PANW, also up there. Cintas, and again, why I do these scans, why I discuss them in my session, and why I take trades off of these, or how I take trades, is if a stock makes a 52-week high, which I tend to show in the videos in my afternoon sessions, that it suggests that the market is, or the stock is strong. Lots of ways to quantify relative strength, but one of the easiest ways is a stock that makes 52-week highs is, by definition, a strong stock. And if we can identify strength, that means the stock tends to get stronger into the future. And for trade setups, that just gets us into bull flags or buy the pullbacks. Just looking at Cintas, and of course that would apply in Microsoft. These are additional 52-week highs. And a stock like Meta, which is Facebook. Of course, we can look at Google, which had a drop from the high but has recovered almost all the way back. Amazon, again, retail name, but still taking part in the fuel of the technology sector, and other sector stocks as well. That includes NVIDIA, which is just coming off of its high on very, very strong earnings, but could be setting up a pullback to its support levels. And all these stocks would qualify as strong stocks getting stronger, and just for the sake of the video, we won't go through all of them. But they have been in uptrends, and for the most part, especially stocks like Microsoft, is showing strong fundamentals. So it becomes very disadvantageous to short or to go against or to fight strong fundamentals and also strong chart trends. Possible, but difficult, and often doesn't lead to anything other than a scalp or a small type of profit against the trend. And that is the trend of earnings and book value and sales per share and return on equity and all the other ratios here in Microsoft or stocks like it, which would include Meta and NVIDIA, just to name a few. But also GE, which is not a stock taking part in the technology boom, is also seeing relative strength. In fact, looking at where the stocks have shown relative strength in 2023, this is our rough performance, percentage-wise, of the performance of the stock in 2023, with the equity market or the S&P being up about 16 to 18%. This is the stock market. Anything above that is showing relative strength. Costco, Apple, Google, Microsoft, Eli Lilly, Intel, Broadcom, Salesforce, Amazon, Adobe, AMD, Tesla, Meta, and NVIDIA show relative strength. But any stock that is under that 18% gain, or if we want to be fair and call it maybe a 0% gain, that's where the Russell is at least, is showing relative weakness. And the larger this number, the greater the relative weakness is to the stock. That includes Walgreens, Pfizer, Bristol Myers Squibb, NE, which is NextEra Energy, CVS, Raytheon, and our RTX, Chevron, and the others, Triple M. So the sectors are flat. The stock market is generally flat, and we can see that again from the sector charts. The bright spot is only in about 6 to 10 stocks in terms of relative outperformance. That's in the XLK. Weakest stocks have consistently been in the utilities, to an extent healthcare, and to an extent the staples, but everything else has been a better reflection of where we are in the U.S. economy. We are expanding, but inflation remains high. The Federal Reserve has kept interest rates high for a reason, to bring back inflation. The bullish stocks are in the technology and, to an extent, some of the retail sector. The weakness is our defensive, and everything else is in between. So be careful, as always, as we go into the remainder of 2023 December. This is Corey Rosenblum with tonight's Theo video update for November 28th, 2023.